Hi everyone, I'm Ken from Crypto Trading KS. This is part of the Real Wealth series, 10 Steps to Master Fear. My mission is to assist you to be more of a financial blessing to yourself and those you love, and also gain real wealth in the process. I focus on the institutional mindset, not retail investing. If that sounds good, please subscribe to YouTube. Rule 774. Master yourself to master the market. Having been in financial markets for more than 3 decades, the emotional management and control when it comes to trading and investing is really important. I've created literally thousands of rules. Each rule is evidenced by a loss. I love to share them with you. Rule 170, crypto is volatile. That's really an understatement. If we look at the KS model, which is a crypto technical trading model based on institutional price psychology, this is actually a logarithmic graph. This shows exponential increases in price and exponential decreases in price. We're currently right here in the bull market psychology segment of the current run. We're coming back to a support level. The probabilities are that we will bounce. We're also very oversold in terms of an RSI trend. Again, the probabilities are that we will bounce. To see just how volatile the last bull market was, we have 20, 30, 40, even 50% reductions in price. Rule 138, all investors become traders whenever they buy or sell. Investors love certainty, and everybody loves certainty, but the problem is Rule 114. Markets penalize certainty. Perhaps the easiest way to understand that rule is to understand price action. Generally, investors buy because there is certainty that the price is going up. Traders, on the other hand, know that certainty is penalized by the market. As investors buy on the way up, suddenly it turns over. Generally, that's when traders sell. Investors tend to hold on, saying buy the dip, buy the dip, buy the dip, and on the way down, they lose hope, they lose certainty because they're so in the red. That's when things turn around, and generally the point at which traders buy. It's really important to understand that the game of financial markets is exactly what you just saw there. Institutional investors have huge amounts of money. They call Main Street retail investors in to buy what they're selling, and then they sell what you're buying. The key is really not to be either an investor or a trader, but to combine the best of both approaches. Each approach has merit. Together, combined, they're unbeatable. I developed KS zone analysis to help people understand what zone they were in. These are the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth. Zone 1 is the panic zone. That's where internal panic from fear, uncertainty, and doubt, or fear of missing out, reigns a person's behavior. Zone 2 is the blame zone. That's where external panic and conflict attacking others occurs. Zone 1 and Zone 2 are simply about people not understanding that certainty does not exist in financial markets. People's focus on attaining certainty just basically terrorizes them. It's a horrible place to be in Zone 1 and Zone 2. But always think about this. These are the 4 stages that all investors and traders progress through. That is, all investors and traders. Zone 3 is the patience and rule zone. This is where people acquire probabilistic fearlessness, and they use a 10-5-10 volatility fund. Everything is on the basis of probability and rules and patience. Zone 4 is the meaning zone. Through gratitude and worthiness, people can accomplish inner and outer peace, fulfillment and meaning, authenticity, integrity and honor. This is really important. Many people think that just the pure attainment of money, consistent profitability in Zone 3 is the goal. It shouldn't be the goal. Zone 4 and Zone 3 should be the goal. Having meaning and having money is a really beautiful thing. Having money without meaning is just another form of poverty. How do people tell if they're in zone 1 or zone 2? I say zone 1 and zone 2 are subject to what I call the light switch effect. People are all in or all out because they want 100% certainty to be 100% correct 100% of the time and have 0% loss. They only want to hear positive news stories and they don't want any uncertainty at all. That is absolutely fair when you're starting off, and people think that way for a reason. It's your money on the line. You certainly don't want to lose it. Zone 3 and Zone 4 is the embracing of probability. It's all about probabilistic fearlessness. It's about looking at a positive trend and seeing negative percentages as buying opportunities. It's not a light switch which is on or off. It's a dimmer where people scale in to trades, lowering their average buy price on the pullbacks and scale out when things get a little bit dicey. It's all about patience and rules and discipline, negative awareness, and being a good loser. This is really critical background to have when it comes to understanding the 10 steps to master fear. Probabilistic fearlessness turns fear into excitement. Excitement, the emotional state of excitement, is exactly the same as the emotional state of fear. You have to rebrand fear into excitement. This is all about knowing yourself and ruling your mind. Aristotle said it really well. Knowing yourself is the beginning of all wisdom. Horace added to that, rule your mind or it will rule you. It's important to be really calm in financial markets and also run the numbers. It's a critical thing to do. Saint Dominic, the patron saint of astronomers, said that the cyclone derives its power from a calm center. So does a person. Very beautiful words and very important when you come to investing and trading. I like to say it this way, that life's internal battle is the real battle. You might notice this particular painting. This is from Clarkson Stanfield, my great-great-great-great-grandfather. It's the Battle of Trafalgar. Self-mastery is incredibly important. All wealth passes without self-mastery. This is actually another painting from Clarkson Stanfield from Mount St. Michael in Cornwall in 1830. The really important thing to understand, all wealth passes without self-mastery, is a critical understanding. Self-mastery makes you keep the money that you get. There are many examples of people who have won enormous sums of money without putting the work in. For example, in lotteries. Down the track, or gambling as well, down the track those people basically give all the money back because they didn't really earn it. Earning the money is really, really important. In previous episodes, I talked about unearned is returned. When you earn it, when you earn your money through self-mastery, you never have to return it. It's yours and will continue to grow as well. There's quite a lot of background here because I believe in giving you really, really solid foundations. So what are 10 ways to master fear? Step number 1. Become aware. Stop and disconnect and know the rules of the game. For example, when you look at the market going down or you just look at the market, are you stressed or tired or angry? If you see a big plunge in price, do you feel sick or unsure of what to do? It's important to understand these emotions turn off your brain. They literally stop you from thinking. The first key of becoming aware is to reconnect your mind into things. So when you stop and disconnect, you can restart your cognitive process. You have to outthink the problem, and the problem is just simply emotional reaction. Step number 2 is to run the numbers. We run the numbers all the time. Search the sources all the time. We don't take much notice of the news. We let the news signpost us to the sources. We do the science. We look upon and at so many different sources to understand the nature of what is happening. And we don't get sucked into the hype cycle. Because why? Institutions run the hype cycle. They absolutely want you to panic and sell when they want to buy. They have a lot of money. They need you to panic in the market en masse because they're buying billions and billions and billions of dollars worth. And when they want to sell, they have to hype things up so that they can exit their positions. Step number 3 is to assess the positive and negative probabilities. Nothing is all one way or the other. There's always positive and negative probabilities playing out all the time. That means that there is always good news and always bad news. And when you listen to the media, they will frequently focus on something that's been around forever and just say, oh, this is the reason that this and this and this happened. Generally, that is not really the case. Just be really aware of getting sucked in by media hype. It literally is hype. And that brings us to step number 4. Not retail, think institutionally. Institutional thinking is incredibly different from retail thinking. Institutional thinking is all about moving billions and billions and billions of dollars. Retail thinking is something on a far, far smaller scale, of course. The issue is that the financial markets are always dominated by large interests or very wealthy investors. Someone is always on the other side of the trade. If you're selling in panic, you have to ask the question, who is buying this? And the likelihood the person buying it is not dumb. They are quite smart in the main. When you think as an institutional investor, you will think very, very differently. If you've ever managed to watch the film Wall Street with Gordon Gekko and Bud Fox, there's a particular scene in there where the media is called in. Please watch the film. It's just eye-opening. Step number 5, 3-way decision making. This is really important. What generally happens is that people make a one-way decision. It's going up, and they'll hold until some point in the future. Prices are always moving in a wave. They're going up and down, and they do consolidate as well. 3-way decision making is used to short circuit fear. The 3-way decision is, what do I do if price continues to go up, or it breaks out and it massively moves to the upside? What if it goes the other way? That's the second way. What if it plummets? What if it goes against me? The third way is, what if it consolidates and goes sideways? Understanding what you will do in each of these situations is a way to master fear. I always talk about it on the main channel. I want to make sure that you are equipped at all times. Step number 6, it's excitement and opportunity. When you feel fear, just reframe it. Make sure that you prepare and rewire. You always want to rewire your mind into a state, especially in the financial markets, which is one of excitement and opportunity. I've spoken extensively about the 10-5-10 fund. For example, if you buy something at $10 and it reduces to $5, you just lost 50%. But if you bought it at $5 and it goes back to $10, you just made 100%. This is the heart of institutional thinking. This is why prices are negatively biased. And this is a thing known by institutions. When the price goes down, retail investors think it will not stop. It will just keep on plummeting all the way to zero. Crypto is literally a roller coaster, and you need to strap yourself in. There's going to be horrifying twists and turns along the path. And then beautiful views as well. Turning fear into excitement is really critical part of professional trading and professional investing. When you see red in the market, I'd like you to think that that is opportunity. Now, step number 7 is really important. It's courage and self-mastery. Self-mastery, as we've seen, is incredibly important, and living a courageous life is what life is all about. The beautiful thing when it comes to financial markets is that financial markets can basically rid you of anxiety and fear if you're prepared to go through the lessons, go through the hard learning. And it is hard learning, which brings us to step number 8. Fight self-doubt and self-sabotage. Self-doubt and self-sabotage are everywhere. It's really unfortunate. The media is largely to blame for this, because they're always telling us, the media is always telling us that the house we live in is not good enough, we should get a better one. The car we drive is not good enough, we should get a better one. The clothes we wear, well, they're not good enough, we should get better ones. And whatever it is, the technology that we've got, no, we need better than that. That's why I always say you're worthy and unique. You deserve every success in life. You don't need to keep up with other people. You're a unique human being. Just be yourself. Step number 9, act counterintuitively. Counterintuitively is acting in an opposite manner to how most people would act. When you want to go out, go in. And when you want to go in, go out. It's a really difficult thing to do, and it does require a lot of knowledge and rules in order to understand when exactly to do that. But if the market sells off really sharply, that is absolutely a fantastic time to go in. Step number 10, knowledge and mentoring. Knowledge is incredibly important. If you wanted to be a doctor, you wouldn't just, or a surgeon, you wouldn't just turn up in the operating theater and say, give me a knife, I'm just going to cut this guy open, without any knowledge. You really need to know what you're doing. If you are an engineer, or you wanted to be an engineer, without training or without any knowledge, it would be really hard to build a bridge or build a skyscraper. You need the knowledge. If you wanted to be a teacher, but you don't know the subject materials, it would be very, very difficult to teach your students in a meaningful way if you don't know what you're teaching. This is why knowledge is critical to attain, but that knowledge needs to come from the right people. So mentoring is also vital. When it comes to financial markets, your mentors should be people that are well-rounded. They should understand the psychological aspects of investing and trading as well, because so many people lose money in the financial markets, not because they don't know, but because their emotions get the better of them. You really need both sides. It's really important to fight life's internal battles and win. And it's just you against whatever is bugging you, basically. You can always win an internal battle because it's your battle. You have absolute jurisdiction over it. Sometimes it doesn't feel that way. Sometimes things feel larger than what they are. That's fear magnifying everything out of context and out of control. You're a victorious individual. You can win every internal battle, and that is the real battle, the battle for value and meaning in life. When looking at an overview of this, think of yourself as always being victorious. You're either winning or you're learning, but you never ever lose. Nobody loses. They only learn. And that learning focus is incredibly important. It will be a game changer in your life. And of course, this doesn't just apply to investing and trading. It applies to everything. That's why financial markets are so incredible in terms of creating meaning in life, if people are open to that, and if they don't get too focused on the money. The money is simply an outcome of doing things correctly. It should never be the goal. And of course, people make it the goal because, like step 8 says, fight self-doubt and self-sabotage. You see all of these people driving around in Lamborghinis and you say, oh, if I was a success, I would have a Lamborghini. What if you don't like Lamborghinis? You don't need a Lamborghini. It's not about that. You want a rich and meaningful life, rich in experiences, in love, in integrity, in courage, in fearlessness. You could actually look behind some of these people with overt signs of wealth. You won't find much there. In terms of self-mastery, so many wealthy people are deeply unhappy. And what is the point of being incredibly wealthy if you're unhappy? You need to be happy and you need to be secure. And if you're doing things in the right way, over time you will become rich. There is no requirement to become a millionaire overnight. If you want to do that, you'll probably end up losing all your money. That is put there by institutions. They want your money. They want you to get sucked in by a fantasy. The reality is that you need the knowledge. You're combating big players, and they can be won over by moving with them. The Crypto Trading KS Masterclass will be coming out on December the 11th. If you would like to lock in your very substantial masterclass discount, please reach out and email me at ken@kenstanfield.com. Stanfield has 2 D's in it. This particular masterclass will cover everything from first principles. It doesn't assume any pre-knowledge. For many years, I lectured first and second year stats from the numbers 1, 2, 3, 4, 5. I found the students gained a passion and a love for mathematics that they simply didn't have before, because I don't complicate things and I make things really practical and cut through all the hype and fluff. Many people have been asking me if they should get a subscription to TradingView. We're really lucky. TradingView has extended its sale. You can see here, I have the premium version of TradingView. It becomes, my subscription runs out in 918 days. I certainly like to be paid forward. Okay, but the thing, I would recommend that you get the premium version if you can afford it, and if you want to make trading and investing a professional hobby, if you like, or a professional career. It's like everything. If you want to be a plumber, you have to have the tools. If you want to be a computer programmer, you need a computer. And if you want to be a professional investor or trader, and we know all investors become traders whenever they buy or sell, I believe having a subscription to TradingView is a really, really important thing to do. You can get this 60% discount through the link that I've provided in the description. I hope that helps. When you see negative news stories out there about doom and gloom, think who has paid for that, and especially think how you're being impacted. I think Horace's quote is just fantastic. Rule your mind or it will rule you. Self-mastery is so very, very important, and it's an investment in not just you. It will impact everybody around you, and it will impact things intergenerationally as well. It's a very important thing to do. In the comments, I'd love to hear about the fears that you've come across, and if you've managed to master them yet or not. And everything is a process, and people take their own time to get through things, but it's a really beautiful community that we have. Everybody is incredibly supportive of each other. Reaching out and sharing your fears with other people just makes everybody stronger. You'll find that your fears are very well shared amongst everyone. I'd like to thank the very kind and generous community members who've reached out and bought me a coffee to show their appreciation on buymeacoffee.com/cryptotradingks. Thanks so much, everyone. I'd like to especially thank Trevor. Thank you very much. And looking forward to joining your upcoming masterclass. Not long to go, my friend. Kirk from San Diego. Thanks so much, Kirk. Nick. I'm new to crypto but feeling super grateful for your knowledge and perspective. Thanks so much, Nick. Lee. I stumbled upon your content a few days ago. Wow, I wish I had earlier. Great direct-to-the-point content. I have had to learn most of this on my own. Thanks, Lee. It's really tough out there, my friend. It's a very nice thing for us to share this information and time. Dina, thank you so much. Dina Van Dam. Wow, that's such a cool name. Vincenti, thank you so much, my friend. Always very nice of you. And I'm not sure how to pronounce this. Shivi Vibo? I'm so sorry if I got your name wrong there. Hi Ken, I'm so grateful to you for your integrity, generosity and passion. Can't wait for your course to begin. I wish you peace and joy. Thank you, my friend. That's really sweet. John, thank you, John. Thank you for the calm. Very welcome, my friend. And one of the things, when you come in, when you log in to buymeacoffee.com, you can access the post tab here. I'll just log in and show you what that looks like. There you go. I've just logged in. So now I go across to the post tab and you can see a lot of different videos that I put together. And this one could be really interesting for people. Rule 18, applying the 10-5-10 rule. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.